Kawaljeet Saluja is Executive Director and Head of Research at Kotak Institutional Equities. Thanks very much, Kawaljeet. Good morning. Great to have you with us here. Prashant, this side. Earnings for IT companies is behind. Stocks haven't really done very much except one-day pops, either down or up, and big reactions, but just post-earnings. It's kind of becoming, a trend. For the most of the quarter, stocks don't do very much. Most of the action happens either just before the results or mostly after the results. I mean, Infosys, TCS, a case in point. What's your sense? Where do these large caps go from here?
Well, I guess, I don't know too much about the stock behavior before or after results. But as far as our view is concerned, we clearly believe that the next 12 months will be pretty challenging for the Indian IT services sector, led by a combination of a significant demand slowdown and increased competitive intensity, which will start reflecting in a pricing pressure and a continued slippage in financial performance of the IT names. So from an overall sector standpoint, we are cautious and we have a sell on all tier 1 IT names.
Much of the discussion with IT, Kawaljeet, has been centered around potential EPS upgrades because of rupee depreciation, the benefit hence because of that. A lot of discussion is still centered around that. The dollar number, the dollar EPS, the dollar revenue number, is looked at, but people still talk a fair bit about the rupee, etc. How do you think about it? Is it even relevant in times like this?
Like I said, at a fundamental level, right, when the business is going through challenging times, it's logical to expect that the clients of Indian IT companies would demand some benefits of rupee depreciation. So essentially, if you just look at the financial performance of Indian IT companies, their margins have barely changed on a YOY basis, despite 22 to 23% rupee depreciation. Now, I guess, the reason why these companies have not benefited at the margin level has been a function of some amount of lazy cost in the system, along with a client's demands of pricing concessions, because the clients themselves are facing a pretty challenging environment. Now, as far as the benefit of the rupee at the translation level is concerned, that is something which will be there, but I'm not sure whether IT companies would be able to retain the margin benefit of rupee depreciation.
So, what essentially what one makes out from your commentary is kind of hard to call where the trough is, the bottom is, in terms of dollar revenue EPS numbers. There's no clarity there. Yeah.
No, I guess the clarity will be a function of where the IT budgets head. Let's say in calendar 2013, the discretionary IT spending environment improves, the client's IT budget, especially in the financial services vertical, improves, then I guess you'll see a lot more stability and in the sector. But I guess in the current environment where clients are pulling back on projects, the decision-making cycles are slow, it's difficult to expect an encouraging performance from Indian IT. So the bottom line is that you have to evaluate, the trend in growth on an annual basis, and I guess November, December would be a critical time, or Jan next year will be a critical time, wherein we'll basically get early indications of how calendar year 2013 IT budgets would look like.
Yeah. Some argue based on valuations, Kawaljeet. They say that valuations are much below historical averages. They're still higher compared to the global financial crisis lows, but they're much below historical lows. It attracts a section of the market. Yeah. Does that argument hold for you?
The valuation argument is a function of confidence on earnings. And I guess the consensus earnings numbers are pretty shaky right now because of the factors which I just mentioned, that the growth slowdown has been far slower. Companies have built, big benches. And on top of that, clients are basically, demanding pricing concessions. Now, so to that extent, the valuations which you are basically seeing is perhaps, reflecting a steady state environment, which may not turn out to be the case. So valuations has to be looked against the backdrop of shaky consensus estimates.
How much of what we are seeing, the environment for techs, Kanwaljit, is cyclical in nature, and how much of it is, structural change? So, what maybe what banks are going through is, the industry is contracting, right? So that's structural, right? Right. Some of it, though, is cyclical. Things will bounce back.
True. So, on that, the way to look at it is that historically Indian IT sector has grown at a rate of 16 to 20% above the growth in IT budgets. Now, in my view, that, a growth or market share gain, a growth rate would be essentially, 10 to 12% above a change in global IT budgets. I don't think, I dispute the opportunity size for Indian IT companies. I think, the opportunity size is still pretty large. There is basically large amount of untapped opportunity in the European, the entire Western European market is, got very low penetration. You have opportunities in the government sector. Asia Pacific markets can grow. So the opportunity is there. But the way I would put it is that, I'm personally disappointed with the collective failure of the industry to expand the opportunity size or increase the addressable market, at a faster rate than what they have done. My view is that, they could have done a better job of increasing the addressable market, which basically, has not turned out, to be at the same pace as I would have thought earlier.
A quick word in on particularly Infosys and what it is going through, Kanwaljit?
Infosys basically tried to change, the revenue mix, the business model. They invested a lot in consulting and package implementation and system integration. And they have built a cost for an environment, which is going to be relatively buoyant or at least steady in nature. I guess, in that phase of transition, what they have been caught by is a sudden, deterioration in the spending environment. The discretionary spending is nowhere close to what, the management thought, would have been the case earlier. And so to that extent, they are suffering more or impacted more than the rest of Tier 1 IT. On top of that, their cost structure is higher because of the investments in consulting, and that's reflecting in a relatively weaker margin performance as well. So, let's say the environment improves, then perhaps, Infosys may perform better than peers. But so long as the environment continues to be challenging, Infosys will continue to underperform on growth.
Let's widen the scope of discussion, Kanwaljit, to other technology companies under your coverage as well. Is there anything you like?
We have, as I said, right, a sell rating on all Tier 1 IT names.
Yes. No, let's bring in mid-caps as well.
Mid-caps always is a bottom-up, story, a bottom-up approach. We have to basically look at companies which will benefit irrespective of the environment, and basically have got a certain margin levers, or at least can keep profitability intact despite the challenging environment. Now, within the mid-cap space, the stock that we like is Mindtree. We are confident on the execution capabilities of the management. We are confident about the strong account wins which they had over the last few quarters, which will translate into reasonable revenue growth. And, we have got reasonable confidence on their ability to keep margins in a respectable band. And the valuations are not expensive either. So, in the mid-cap space, Mindtree is one name which we like.
Mindtree, okay. You've got to reduce an Exaware, same for Polaris, and that's the actually only one, right? Mindtree, which you like. You think price should be 710 rupees?
True.
All right, Kanwaljit, thanks very much for your time. Great to have you with us here, and good to hear your thoughts on appreciate it very much. Kanwaljit Saluja at Kotak Institutional Equities.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.